Hello, welcome to Business Incorporated live on Channels Television. It's another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. We gauge rate cuts in Africa as Kenya and Uganda lead. Kenya drops note printer Delarue, hires German firm to print new banknotes. Plus, Egypt's annual urban consumer price inflation slid to 25.7% in July from 27.5% in June. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now. We see global oil prices edged higher today for the third straight session, with Brent crude futures up about 23 cents, about 0.3% at $78.56 a barrel, while we see the cheaper grade US WTI not getting about 29 cents, about 0.4% to $75.52 a barrel. We also see for gold prices, that also firmed today. Spot gold rose by 0.7% at $2,398 per ounce, and on track to snap a five-session losing streak. That's for U.S. Gold futures, and that was at $2,437. For more now, let's talk to Carlo Alberto de Casa, as a senior market analyst, joining me via Zoom. Great to have you on the show. Hello, Carlo. Can you hear me?
Good afternoon. Sorry. Thank you very much for inviting me.
Yeah, great to have you again. So it's been quite the week for major commodities. Looking at oil now, do you think the $70 level will hold? That's for Brent and WTI.
For the time being, the scenario for oil remains quite challenging. The oil price dropped significantly last Friday in the first part of this week, when the risk-off scenario was dominating the scenario on the markets. Concerns about a potential recession in the US, and not only in the US, pull down the price. There are anyway some elements supporting the price, and we can include in them the rising tensions that unfortunately are seen in the Middle East following an Israel attack on Iranian territory and the risk of further escalation of tension. What we have seen in the last few days is a rebound of price of oil, with the WTI that found an interesting support level in the region of $72 per barrel. The overall scenario remains relatively weak, but anyway, the price, I'm talking about the WTI, so the US oil, has managed to find an important support to generate a solid support zone between $72 and $72.50 per barrel. The rebound we're seeing in the last days found a resistance being covered by the level of 76, and we have a following resistance area, 76.8. A clear signal of recovery and the strength will arrive only if WTI can jump and surpass 79. For the time being, this does not seem the most likely scenario, even because, as we said a couple of minutes ago, the world is still fearing risk of recession. What does it mean? In case the US demand of oil, China demand, and Africa demand, and Europe demand of oil is slowing down, we could have some trouble, we could have some problem for the price. Of course, the OPEC Plus can reduce the supply of oil in order to keep prices high, but we should still understand how big can be the decline in the demand of oil. For the time being, in the first part of the week, where markets were strongly in red, and these come mostly from Asia, we had the Nikkei, the Japanese Nikkei, that lost more than 12%, 5% on Friday, 12% on Monday. And this was mostly due to the end of carry trade, as the Japanese central bank is increasing rates, while other central banks, particularly US, is expected to cut rates in the next few months, in September already, and European Central Bank as well. Therefore,
Okay. Yeah, definitely. Be watching out for what the central bankers are going to do next. But what are you seeing for gold prices and oil as we get into, as this week, winds down? What are you seeing for next week?
Gold price?
Yeah, for gold prices and oil.
Yeah. Okay. Yeah. For the time being, we have seen a decline of gold, which are turning in the region of $2,400. I still see a bit of turmoil, a bit of the market is still waiting for some further direction, which can come from central banks. I don't see big chances of major decline for gold, so I see gold in a stronger position than oil, and that's quite simple. In case of a recession, oil can be strongly impacted. In case of a recession, the industrial demand of gold is relatively low, is less than 10%. In case of a recession, gold can play its traditional role of safe haven and can be supported by investment demand, and will remain a significant asset for investor portfolio. A final consideration about silver that declined below 27. It can be interesting because silver is coming close to a strong support zone, which is represented by the level of $26, and the price lost almost 20%, more than 15% from the recent top at 32. Therefore, I think that silver should be monitored, and we should put silver in watch list, as it can be very interesting in the next few weeks.
Keep watching out for that, because we're seeing even when gold is in the green, so most of the time we see silver. That's recently silver on the downside. But thank you so much. It's great having your perspective, Carlo Alberto de Casa, Senior Market Analyst. Thank you so much.
Thank you very much.
All right, let's look at other matters now. As a long-term solution to the demands of the protesters would be to engage the youth meaningfully, especially in the area of food production. I would say former Commissioner of Land in Imo State, Mr. Uche Nwosu, believes that this can be implemented when the right individuals are given the right office and tools to work with. Was guest earlier today on Business Morning. Take a listen.
There is need to rejig the youth ministries in the federal and in the states. I think what vital states should do is, one, they should immediately convey a town hall meetings of youth from one local government to other. With that, they can be able to identify the problems of youth according to local government. The problem of a youth from one local government is not the same problem of a youth from another local government. Most of the time, we have the briefcase politicians being given appointments. You see somebody who is a commissioner for agri, he's not even a farmer. Sometimes you see people who handle the Ministry of Agri, they have not even gone to farm. They don't even know what a hoe is called. They don't even know what a tractor is called. So when you give them an office, they don't realize that when you have tractors and hoes and knives and these things meant for farming, they don't realize that you are taking it back to the farmers. They think it's something that is kept there. So it has to come with somebody who has their heart for these farmers. You might be surprised that sometimes the federal government might give farm instrument to some ministry, and you see those instruments there for 2 years, 3 years, and has not been distributed. What does that tell you? That tells you that they are not even concerned, because the head, when the head is wrong, the entire body will go wrong.
And now to our first conversation. Well, inflation is a global problem, but some countries are winning the battle to tame inflation. Who are those winning central bankers. Let's take a look at some data now. We look at African economies, their inflation and interest rates. At this time, starting with South Africa, we see inflation rate of 5.1% and interest rate 8.25%. Kenya has a 4.3% inflation rate and 12.75% interest rate. We see the likes of Egypt and Nigeria struggling here with 27.5% inflation rate. For Egypt, Nigeria, the biggest there, 34.19% compared to interest rate of 26.75%. But we see Egypt leading with interest rates at 27.25%. Uganda, 4% for inflation and 10% interest rate. Let's look at the countries leading with rate cuts. Right now, we see the likes of Kenya and Uganda, both their last meetings, cutting by 25 basis points. So we're seeing these two countries lead rate cuts right here in Africa. So definitely we're seeing some economies actually lagging when it comes to taming inflation. But we see these ones, Kenya, Uganda, cutting rates at this time by 25 basis points each. Well, joining us now for more, we have Mr. Sam Chidoka as MD Kairos Capital, joining me via Zoom. Great to have you on the show.
Hi, buddy. Good to be here. Thanks for having me.
And interestingly, you're spending your birthday with us. Happy birthday.
Thank you. Thank you. Thank you. Well, it's a work day. We're still at work.
Exactly. So we'll party later, hopefully. Well, let's get into the matters now. We see Nigeria, has the second largest, the largest inflation there number, going by our last report, 34.19% in these major economies in Africa. But we see Egypt leading when it comes to interest rates, and we're behind Egypt there. So talk to me about how this elevated interest rate is impacting domestic investment, in countries like, Egypt and Nigeria. And, looking specifically at Nigeria, we know the banks are tapping the markets at this time. How is it also impacting capital raises?
Okay, thanks. Thanks again for having me. So we've seen the Central Bank of Nigeria and the monetary policy arms of our government do their best to try and tackle inflation by increasing rates. And we can also see that inflation has been growing at a reducing level over the last 3 months, thereabout. So you've seen inflation sort of like temporary, where yes, inflation is still increasing, but it's increasing at a decreasing level from what we've seen, showing that the increase in rates that we've seen is having some effect, perhaps not as much, but some effect on inflation figures. However, when it comes to doing business within the country, you will find that in terms of raising capital, for people who want to raise capital to do business or for whatever venture or for just real estate, cost of capital has increased significantly because of the high inflation rates. And what happens is that cost increase in cost of capital is then transferred also to end users. And so it becomes like a domino effect that just keeps on going around our economy. In terms of the banks having to raise capital at this point, this ordinarily shouldn't have been the best time for banks to raise money. But remember that banks are raising money due to regulatory decisions, not because they want to, but because the central bank has looked at their capital and decided they should increase their paid up capital and share premium accounts, right? So, because if you look at the fixed income side of the market, you can get 26% return by making an investment in treasury bills. So you ask yourself, you take the risk with the stock market. But the banks have also done well. Many of the banks are raising money right now. Dividend yield chasing 10% over time. And hopefully we'll continue to see the banks do well as a long-term investment arm of people's portfolios going forward.
And we know this is about the 13th time we've seen the rate hikes in Nigeria, but inflation, still stubbornly high, but you did mention, it was rising at a slower pace, which, some have seen, as a win. But if we look at what's happening in the U.S., we're seeing investors calling for, rate cuts. We got the jobs report last week, and it showed that there were signs that the rate hikes were already impacting the jobs market. So we see the U.S. Fed afraid of breaking something in the U.S. economy. So looking at Nigeria here, do you think with the rate hikes we've seen so far, we've broken something in the Nigerian economy?
Well, so in terms of, we've had persistent rate hikes. Yes, you're correct. I think it's how many months now? We've constantly increased NPR, and now we are at 26.75 in terms of NPR. Well, so you have to dimension what we need to do as a nation. There is monetary policy and there's the fiscal policy. What has happened over time is that we've tried to run the economy on monetary policy. And if you take a bicycle as an example, you can't ride a bicycle on one wheel. It's called a bicycle because it has two wheels. The economy is run on the wheel of monetary policy and fiscal policy. The monetary policy side, well, what can they do? Increase rates and try and intervene in the foreign exchange market, all of that to try and tame inflation. But there is still a lot of structural issues in the country that the monetary policy cannot handle. So you have a case of insecurity, which is affecting food inflation. Food inflation is now at 40% thereabout. If you check in 2023 about this time, food inflation was about 25%. So today it's now about 40%. But what is causing it? Because again, we're not able to produce enough food because of insecurity, because of infrastructural issues, because we don't have ways of preserving perishable goods, just ways of moving things from the farm gates to the market gates. So those are structural issues that the monetary policy makers cannot deal with, all right? You also have a case of imported inflation. Some of the things that are imported because our currency has depreciated over time and all of that. So you are seeing that imported inflation also happening. And there isn't so much we can do about that. That's a long-term solution where we become productive and rely less on importing things. But all of these are having effects on our economy. And I think that we've gotten to the place where perhaps inflation is beginning to bottom out. We don't expect to see much increases anymore going forward. There isn't so much room again. I don't know what the monetary policy can do that they haven't done. But I was happy to hear some things coming from the fiscal authority. Just maybe 2 days ago or thereabout, the president's spokesperson announced some cuts in government expenditure. One hopes that the announcement is followed through with actual cuts. They've also announced some cuts across ministries and departments in terms of travel expense, how many people can travel, in terms of ESTA codes, just trying to deal with recurrent expenditure. So the fiscal authority has to come to the party to help with dealing with these issues around inflation.
Right, and definitely I'd like you to, before I let you go, just pick your brain a bit. Looking at most other economies, we've seen the likes of the UK, the US talking about rate cuts. We're already seeing some countries in Africa actually cutting rates at this time. In your mind, when do you see Nigeria's MPC actually cutting rates? Like, how many years from now do you see this happening?
Well, I think that with where we are, the fact that we've looked at the figures, see that inflation is beginning to increase at a reducing rate. We think that by the next MPC, it will most likely be a hold if things continue the way they're going. And perhaps we begin to see inflation retreat. Maybe sometime about Q1 next year, we will begin to see perhaps some slight cuts in rates, because it's essential. At the end of the day, these things have a cyclical effect on the economy, effects on prices of food items, products that you have in the economy, and those things are affecting. That's what is leading to some of the unrest that we're having. But again, because people do not understand why some decisions have been taken, I think there's some communication that needs to be done in that regard. But I don't see any rate cost cut happening in this year, except we see a massive some level of reduction in inflation, because the MPC has been clear that the increase in rates is to target inflation and to stabilize exchange rates. And with those two, we're still struggling. So we're not like Kenya has 4% inflation, and we're not at the same level at this time.
Yeah, definitely not at the same level. But thank you so much. Always great having your perspective, Mr. Sam Chidoka, MD, Kairos Capital. Enjoy your day.
Thank you.
All right, after the break, we're going to head straight to the markets, get a sense of what's happening with local bourse and major global markets we track. That's in a moment. Just stay with us. Alrighty then, let's head straight to the markets. We have Anete Edet giving us the details, and we see the Central Bank of Nigeria sold $876 million at 1,495 naira to the dollar. So it's the Dutch auction model there that we saw yesterday. We've had it before, but after a long time, it's back again, and definitely it's a bit to stabilize the FX market.
Yeah. Ladi, but my question is, now that we've seen, following the report by the central bank that it would reintroduce the retail Dutch auction, which was suspended sometime almost 10 years ago, about 2015. It had a positive impact on the naira. We saw the naira gaining, particularly on the official market, and around the world. This news is being tracked. So, if it had that impact, why was it suspended in the first place?
I'm guessing that's the big question, at this point. But it's back again. So definitely we're watching if it's going to have a positive impact. But, first day, we're already seeing strengthening for the naira. So it remains to be seen, what happens going forward.
But first, before we talk about that, let's talk about the stock markets around the African continent as well. Then we'll go back to that, and as well as other markets. Now, let's take a look at intraday performance of major stock markets around the African continent, starting from the home front, Nigeria here, where the all-share index, well, back in the red, although on midweek trading session, it was up by 0.18%. And this was already thanks to buying interest from Wando, FBNH, and some other gainers, which made the market to go up by 0.18%. But at intraday, 0.67% was the decline. That's the last time we tracked it, which the markets had been just fell back within this, still fluctuating within this level here. 97,000. It's not been able to go back to that 98,000. But the market, of course, has a mind of its own and will move in another direction before the close of trading. Now, for South Africa's stock market, 0.46% on the JSE Bourse intraday. Most of the African markets were in the red. Egypt was the only gainer there. If you can take a look at that on your screen there, Egypt was up 1.06% at intraday, 28,000, almost at the 29,000 points. While Kenya's stock exchange, the NSE, it was down at the close of Wednesday's trading session. Kenya still a little bit backwards. So when the rest already close, it will just be opening for business. And then, so that's why we have the numbers for Wednesday, 0.73% at the close of Wednesday's trading session for the Kenya Stock Exchange. Now, we're talking about the Dutch auction. Two auctions were carried out yesterday. First, we had the NTB, the Treasury Bills auction, which our analysts will be telling us more about that. And at the same time, we also had that much awaited retail Dutch auction by the central bank, two of it, where we saw more than $800 million sold to bidders there. And that's the very first time that in almost 10 years that the CBN will be reintroducing that Dutch auction. And of course, we had that rub-on effect across the currency market, because it was done in a bid to shore up, to strengthen the Naira. And of course, we saw that the Naira had gained 0.3% at the close of Tuesday's trading session. We saw it closing at about 1,059. So, but to give us more details about that, let's talk to Caleb Alimi, Chief Dealer at Providence Bank, for details about this retail Dutch auction, as well as the NTB and intraday market performance for the fixed income market. Thank you for joining us, Caleb.
Good afternoon, Anita. Thank you for having me.
Okay. So now, give us more details. Can you let us in more about this retail Dutch auction? There was two bidders. We know lots of dollars was sold to investors, and this is the largest so far for under the current CBN governor Olayemi Kado. So give us more details about this auction carried out in mid trading session.
Thank you, Anita. You know, about the reintroduction of the retail Dutch auction system, I think it's a very welcome development. At different times, the CBN had come in to intervene into the market to try and bring down the rates of bring down the exchange rates, and we've seen that so many times they've sort of like tried and failed. There's this thing about consistent demand and constant demand, but with this Dutch auction system, we hope that it is consistent. This is the first of it that they've done in recent times, and the total volume sold is significant. Actually, it's $876 million. I think it's the largest single allocation that they've done in a very long time. Now, what we expect is that they, do this another time. The moment they can, reintroduce it or do it some other time again to continue to bring that confidence to the market. The CBN over time has been the highest supplier of, dollars to the market, and once again they've just come to show that again, that they have the arsenal to actually, appreciate, to lead to the appreciation of the Naira. So let's see how frequently they bring this back and what the impact will be.
Okay, now according to results, to reports I have here, is that the settlement for the successful bid is scheduled for today. I would like to know if that has been carried out, and as well as the detailed results of the qualified bids will be published today. So, but has the settlement been done as we speak?
The settlement will happen tomorrow, Friday. The auction actually, we submitted the bids on Tuesday, but the auction, according to the circular, actually took place on Wednesday. So settlement will be tomorrow, Friday. Settlement and delivery will be tomorrow, Friday. So that is when we expect to see the impact, on liquidity in the interbank markets. Speaking about naira liquidity, and then we'll also see the major impact on demand for dollars, across the nation as well. From the parallel market to the official markets, we expect to see the naira appreciate across those markets.
Okay, so now away from the retail Dutch auction, let's move over to the Treasury bills auction carried out yesterday, the very first for the month of August. Now, can you give us details about this? What was the result?
Yes, the results, so, they offered a total of about 216 billion across 3 maturities, and then they sold exactly what they offered. They sold the bulk of that on the 1-year paper where they offered 148 billion, but they sold about 162 billion. What we've seen is a drop in the stop rates of that 1-year paper by about 21 basis points from the last stop rate. The last one closed at 22.1, but this one closed at 21.889. And that was, on the back of demand and improved liquidity, engine liquidity in the interbank space. We expect that, at the next auction, if the market remains liquid, we could see a further drop in this rate. However, given that we're expecting FX settlement, FX settlement is expected to take around 1.3 trillion out of the market. So market may become a bit negative. But again, around the time when the next auction is going to be floated, we expect the statutory allocations to have also been released to improve liquidity situation as well. So the main thing that has happened from this auction is the drop in the 1-year paper by 21 basis points. However, on the 91 days and the 182 days, those ones remained constant at 18.5 and 19.5%.
Okay, so Caleb, now just in 20 seconds before I let you go, next week, yes, we'll be expecting Nigeria's inflation for the month of July, which of course we don't know what that will come in. What is your expectation, and then what is the intraday market activity for the fixed income markets?
Well, let me start with the easier one, which is the intraday fixed income market. What we've seen is a bit of demand for the 1-year Treasury bill. The yield is interesting at around 27%, 28%. So we've seen a lot of asset managers, pension fund administrators, and other investors generally come and pick that security in the market, in the secondary market. There's still a lot of appetite for it. It has dropped from the 21.8% where it closed at the auction to around 21.5, 21.4 levels. We think that, there's still appetite for it and it may continue to drop. As per my outlook for inflation, I expect it to remain elevated around where it is. The last one closed at 34, printed at 34.2. I think we wouldn't see any significant drop until food inflation begins to actually decelerate, and we don't expect that to change significantly until harvest season kicks in fully from around September, October. So I think inflation will remain elevated around 34 levels.
Okay, Caleb, I think we'll leave it there. And before I let you go, let me just congratulate Providence Bank for that merger that you had with Unity Bank, which is listed on Nigerian Stock Exchange. And we hope to see more activity on the merger.
Thank you very much. Thank you very much. Providence Bank, is growing, and is growing in leaps and bounds. I think the merger also just shows, or the business combination just shows the confidence that the central bank has in the management and in the leadership of Providence Bank. I think it is a good step for the industry generally. It's an addition for the entire stakeholders.
Splendid. Good. Thank you so much for that analysis on our show. Okay. So that was Caleb Alimi, Chief Dealer with Providence Bank, giving us details about the market numbers for the fixed income market. Now, let's go over to Middle East. Mostly negative sentiment. Only the Abu Dhabi on the United Arab Emirates was able to eke out at intraday 0.30% gain. And so very much at the 9,000 level. Its brother there, the Dubai FM, 4,195.55 at intraday in the negative terrain. On the other side of the market, we see Saudi Arabia in the red 0.56%. That's about more than half of a percent, while the Qatari Stock Exchange 0.24%, about 0.25% in the red at intraday, all tracking the negative sentiments, which we'll be seeing from the United States here, 0.28%. That's the Dow futures and the S&P 500. Also, all the three averages of the on Wall Street as the United States, all in the red, and this is because that rally, which was the rebound which we saw that the market was trying to hold from the sell-off that we saw on Monday, which was fueled by recession fears from the world's biggest economy. It's making its comeback. But in terms of what to expect today, the U.S. market and the world will be eyeing out for U.S. jobless claims, which is expected to come in right about this time at about 8:30 Eastern time, but in Nigeria at about 1:30. And of course, they're expecting a reading of 240,000 initial jobless claims. That would mark a decrease from the 249,000 claims, which is measured in the prior week. And from the United States, we go over to Asia, where we see almost all the indexes also in the red. So it's more like a choppy season or choppy session for all the markets. 0.74% for the Nikkei. For the South Korea's Kospi, 0.45%. Only the Hang Seng Index was in the green, 0.08%. And this is coming just as we had some data from Japan, which shows that most of the economy didn't really do well. So, but in terms of for the Shanghai, which is for China, it was a positive flat, 2,869.90 for the Shanghai index. For the Australia Stock Exchange ASX 200, 0.23% for the close of Thursday's trading session. So, Ladi, I think it's mostly a bearish sentiment for Thursday's close, and we told you that that's a rebound. It was just too quick to call it a sustained rally.
Yeah,
or
just seeing the colors in most of these markets. That's why I don't really trust the rebounds from major, sell-offs. I like to give it some time, before I jump into it. Well, thank you so much, Native, for giving us the details there from local bonds and major markets that we track. But let's take it on to Europe now. See, Swiss mining giant Glencore has dropped plans to spin off its coal business, because the shareholders see it as a cash-generating activity. Well, joining us for more now, we have Chimbona Chimbelu in Berlin. Great to have you, Chip. So what more can you tell us about Glencore's U-turn?
Thanks for having me. Well, Laddie, this decision comes 8 months after Glencore announced plans to spin off its coal business. And that means it is backing the trend of other mining giants. Rio Tinto sold its coal assets in recent years, and Anglo American has plans to exit its coal business. But Glencore said it is keeping its coal and carbon steel materials business after consulting with its shareholders. The mining giant says it needs the cash flow from fossil fuels to invest in raw materials which are needed for the green transition, metals that include copper and cobalt. And the decision isn't just about raising funds for investment. It's also about returning value to shareholders. Coal generated a big chunk of revenue for Glencore in 2022 when energy prices soared following Russia's full-scale invasion of Ukraine in February of that year. So very few people may be convinced that the Swiss company is pursuing what it calls a managed decline strategy to ensure a so-called responsible phase-out of its coal operations.
All right, so how does this decision compare to the rest of the industry?
Glencore isn't alone in backtracking on promises to exit fossil fuels, which account for the bulk of carbon emissions. Energy firms, including Shell and BP, have walked back on plans to reduce their oil and gas businesses. And while Glencore has said it has the support of its shareholders, there has been some criticism. And some are pointing to the fact that Glencore's largest investors include the Qatar Investment Authority and former CEO Ivan Glasenberg, who used to be a coal trader. And the decision has been criticized by climate protection and environment advocates. Now, they point out that coal is banned from some investment portfolios, and that includes the world's largest. Norway's sovereign wealth fund has banned investment in Glencore. But Glencore's U-turn may be a sign that environmental, social, and governance efforts may be facing a backlash. And investors are increasingly more critical and prioritizing revenue generation over sustainability efforts, as is the case with Glencore.
Yeah, so much interest on ESG, but what can we expect from the markets in Europe today?
European markets are expected to trade higher today as stocks continue their recovery following the market rout on Monday. Now, Laddie, today all eyes will be on upcoming U.S. economic data. Investors will be looking to gain more clarity on the world's biggest economy from the latest initial jobless claims. Now, here in Europe, there is no major economic data due today. And in company news, net profit at German industrial giant Siemens jumped about 50% to 1.9 billion euros in the quarter from April to June. Now, that was largely due to a strong performance from its software and infrastructure businesses. Siemens also confirmed its full-year outlook.
All right, thank you so much, Chipana Jabilu. They're giving us the details right there in Europe. All right, let's take it on to East Africa now. We see the Central Bank of Kenya governors reveal that Kenya has engaged a German money printing firm to print its new currency notes, dropping De La Rue. However, it didn't reveal the name of the German company. We'll see this company is taking over after former banknote printer De La Rue left the Kenya market as far back in 2023. All right, let's take it on to North Africa. Egypt's annual urban consumer price inflation slid to 25.7% in July from 27.5% in June. A rate of decline faster than analysts actually forecast. And according to CAPMAS, this showed a month-on-month, we see price fell by 0.4% in July, down from 1.6% in June. Food prices declined by 0.3% in July, though they were still about 28.5% higher than a year ago. A poll of 18 analysts had expected inflation to have slowed to a median of 26.6% in July, extending a deceleration that began in September when inflation reached a peak of 38%. That was in Egypt. And South African motorists are increasingly opting for more affordable Chinese vehicles over traditional German luxury brands like BMW, Mercedes, and Audi. By next year, Chinese cars are projected to account for around 20% of all new car sales. This shift is impacting established German brands, which are now competing across a range of market segments, from hatchbacks to luxury SUVs and electronic vehicles. According to Dawie Roots, chief economist of Efficient Group, the rise of Chinese brands is transforming the automotive industry, providing consumers with more choices and competitive pricing. Take a listen.
What is clear is that South African consumers are moving more to buying cars like, for example, Chinese-made cars and also South Korean-made cars, and there are very good reasons for that. One is that the South African consumer is under a lot of pressure, and they simply cannot afford very expensive cars anymore. But there are some other reasons as well. One is that the quality of cars coming from South Korea and China as well improved quite significantly recently. And there are many reasons for that also. One is that the various industries get significant support from their governments, but something else is that the industries are simply getting more mature. And that means that they are producing better quality cars. At the moment, though, although Chinese cars are much better priced than, say, the equivalent German cars, for example, the quality is just not up to their standards yet, but that is soon happening. In the meantime, they are significantly cheaper than German cars, as an example. I think that the Western car manufacturing companies will come under increasing pressure from the likes of the Chinese, as an example.
All right, so our next conversation, as a global energy focus shifts from fossil fuels to clean energy and renewable energy, we see lithium has become a key commodity, often referred to as white gold. This is due to its importance in battery production, resulting in a price surge of about 134%. That was the last 3 years. It reached a peak of $80,000 per ton. But we see from January 2023 to date, the global lithium price has fallen sharply by over 80%, trading around $12,000 per ton. Join us now. We have Tomiwa Ajole, the analyst at FDC. Great to have you on the show, Tomiwa. So we see Nigeria joined the lithium boom, hoping to diversify its economy beyond oil. But this includes opening the country's largest lithium ore processing plant in Nasarawa State and launching a large-scale lithium project in Kaduna State. Is this effort timely, and what is the potential, of Nigeria's lithium sector?
Yeah, good afternoon, Ladi. Thank you for having me. Yeah, so Nigeria, we do actually possess a large deposit of lithium, in commercial quantity, and obviously that's why the government has made initiatives, to be able to utilize this sector for the growth of the country. The processing facility in Nasarawa, right? Just recently in Kaduna, there was there's a project going on to create one of the largest in Nigeria explorative project for lithium. So Nigeria has the deposits, and we're seeing investment in that area. The only key concern is that the price of lithium has fallen sharply from its record high in 2022. Over 70% decline just between this last year, and one of the reasons why is because supply has increased astronomically in the global space. China is one of the key producers, Chile, Australia, and during 2022, during the lithium price boom, there was a lot of investment into that sector. Even major oil companies now are going into mining lithium, to diversify their revenue. So there was a lot of investment into the lithium sector that has increased the supply of lithium. And then in recent times, due to the harsh global economy, we have high inflation, high interest rates. The demand for electric vehicles have actually come down. So that has impacted the price of lithium significantly. So we've seen the price come down. So that some will say that Nigeria missed the timing, but our price outlook, if the global economy is still leaning towards a net zero emission in 2050, we expect prices to still increase in the long term. But in the short term, for now, the prices are still going to be low. So that's what we're saying. But for Nigeria, with the prices being low, one way we can take advantage is, if we begin to produce lithium is key for our production of batteries. And, we're trying to shift towards renewable energy. Is going to help us with our energy deficit in the country. So if we have lithium batteries in production in large scale, it would enable the switch to solar panels, the switch to renewable energy quicker, and that would help with the energy deficit in the country.
Yeah, I remember when lithium prices were rallying, we saw companies listed that were doing the lithium business actually did really well. I wonder how those stocks are looking right now. But how might the environmental extraction, particularly on groundwater, soil, and biodiversity, how would it impact the living standards of Nigeria's northern region, considering its low socioeconomic conditions and the concentration, mining activities there?
Yeah, so a lot of the deposits in the country is actually in the northern area. And, one thing with mining lithium is there are a lot of concerns about the sustainability. There are a lot of environmental concerns. One, because mining lithium actually requires a lot of water usage. So in areas where they are prone to drought is usually an issue with the water level. And again, mining can also affect the soil level. So there are some major concerns. And also, again, during the process of the mining, there are some harmful toxins that can be released. So it's usually a concern with the production of lithium. And it's also one of the factors that led to the fall in price, because people are now looking for alternatives to drive the shift to renewable energy rather than lithium due to the environmental concerns. But in the northern area where we have the large deposits in Nigeria, what the manufacturers will have to do, or the companies that are mining, one, we need there's going to be there's need for use of technological and innovations, in the sense that if it's water that is being used, there are ways to recycle water, and also there's also need for transparency to communicate with the local communities. There needs to be that close interaction with the local communities, so they're able to know how your operations are affecting them and how you can make changes to make sure that they're not harmfully impacted.
Tomiwa Ajawale, thank you so much. It was great having your perspective. Thank you.
Thank you for having me.
All right, let's take a look at other markets now. Definitely, we've seen the rebound, fizzling out in other markets. We're tracking the U.S. and Asia after that meltdown on Monday. But if we take a look at the crypto market, we're also seeing that rebound also fizzling out there. It's red on the board at this time. Just a few pockets of green. So Ethereum, Bitcoin 0.25% down, but Ethereum taking a bigger blow, down about 3.86%, but TON strongly in a green. Let's look at the sentiment in the markets. Now we did touch fear this week, with fear. Looking at sentiment in the market, definitely when the fear greed index turns below a certain point, then you start to gauge the sentiment with investors, showing that they're afraid at this point of putting more money in there. Let's look at the headlines. Now we see Crypto Harris, that's the Democrats there in the U.S. have launched a Crypto for Harris campaign. Definitely we've seen Donald Trump really big on crypto, and with the last comments he had, at the convention, he did talk a lot about Bitcoin and how he plans to make Bitcoin businesses stay, in the U.S. So we see Kamala Harris' team there talking about crypto for Harris. Now we see Brazil, they've approved the first Solana spot ETF. We've seen Ethereum spot ETF, Bitcoin spot ETF, but we've seen Brazil moving ahead there with a Solana spot ETF. Quite interesting how that's going to impact the price going forward. But let's bring in my guest now. We have Adedayo Adebajo, is a co-founder, ICP Hub Sahara. Great to have you on the show.
Great to be here once again, Ladi. Thank you for having me.
Yeah, so we're seeing Bitcoin and politics playing out right there in the U.S. We've seen Donald Trump's stance when it comes to Bitcoin, and he did say day one in office he's going to fire Gary Gensler. That's the SEC chair right there in the U.S. And we saw the crypto community there happy about that. But now we're seeing the Harris team, the Kamala Harris team, actually talking about crypto for Harris, this way. So how are you seeing all of this play out?
Well, the more international audiences or probably even government-related attention that crypto gains over time has been seen to be in support. Because majority of people are always afraid that what if the government decides to bounce on crypto, which of course will reduce the price over time. So and then it's continuously getting more support, which is also proving to be an asset for electoral, conviction when they contested the presidency and also decided to look into this as a way to win, the hearts of majority of the crypto traders, which the volume is increasing. The crypto industry can be said to be a continent on its own, with a lot of potential voters. So if you focus attention on that particular continent, of course, people will tend to love you the more.
Right. And with the attention we're seeing, it seems the community must be really big, seeing the way Trump is supporting crypto at this time. But it remains to be seen if they actually, when they get into office, they actually back crypto, as I've said. But let's look at other matters now. We see the meltdown from Monday. We did see, some rebounds with markets in Asia and the US, and Bitcoin actually responded. But when you look at that meltdown, it impacted Bitcoin and the cryptocurrency market heavily. And we've heard some experts say Bitcoin is a hedge against inflation and all of that, but it doesn't seem to be hedging much.
Well, for every single investment, there is always a time for correction. Take a look at the stock market as well. The entire industry was affected. Even the great investor, what's his name again, this old man, was said to be owed a lot of cash, recently, selling most of his Apple shares and all sorts. So the entire industry for investors is quite volatile. But still, notwithstanding, Bitcoin is said to be a safe haven for investors for some particular reasons. One, it is fully decentralized. It's entirely disconnected from the traditional banking industry control. And even more importantly, it has limited supply. So which means the banks or the Feds or the CBN cannot decide to print more Naira. The Feds cannot decide to print more USD and all sorts. Crypto, Bitcoin itself is limited to 21 million in total supply, and it can never increase beyond that. So regardless of how volatile the market is, and we're continuously, if we are getting more people into the community, more orders into the community, it is certain that the price will always go up. Well, notwithstanding, investors are advised to diversify their portfolio just to be on the safer side. But regardless, it's still considered as a safe haven. People might want to look into the other industries like gold, real estate, commodities, stocks, government bonds, and so on and so forth, just to diversify their portfolio. But notwithstanding, they have to have it at the back of their mind that even these diversified investments can tend to be, in a way, reduce or increase in value. Nobody would know where the candle will turn.
Talking about safe haven, looking at stable coins at this time, they're supposed to be pegged, to the dollar. So Are the stable coins more of the safe havens in the market?
Yes, absolutely. Because when you're considering safe havens, you have to look into the forex market. Forex market like USD, pounds, and so on and so forth. And stable coin are pegged to each of these forex commodities like forex exchanges. So we have USDT pegged against the US dollar. We also have stable coins for majority of all these nations like China, Japanese yuan, and so on and so forth. So stable coins, the value will always remain the same regardless of the economy. $1 will always be equal to $1, even though it might vary as against other stable coin assets. So, and this is one thing that makes Bitcoin and the entire industry it has created over time much more unique, because it provides ease of transfer of value, from your Bitcoin assets to other stable coins and even to other tokenized value. So if we are talking about foreign exchange, it has it tokenized. If you are talking about agricultural product, it has it tokenized. If you are talking about gold standard, we have also the tokenized aspects on the blockchain supported by Bitcoin and so on. So all these are now combined together into this entire blockchain Bitcoin industry. So you don't really have to worry yourself too much. If the market is volatile, you can easily use your Bitcoin to buy all of these stable assets. So which means you get to have all the options in one.
Right. I guess investors still looking for that safe haven, at this point. But thank you so much, Adedayo. Adebayo is co-founder, ICP.Hub Sahara. Thank you.
Thank you very much.
And that's how most major markets we track are looking today. That's the show. You can visit channelscp.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.